The whole process started years ago, but the dynamic increased after 2015. The Paris Agreement was very important, and of course the Sustainable Development Goals, which has been published by the United Nations.
Good to see you back for another episode of From Crisis to Creation here on Mentory TV. I'm Patricia Falco, your host. And let me say, first of all, thank you to all of you for your participation, your liking, your sharing, and also for joining me in the community on Mentory TV by subscribing for free. And all of your comments, they're not only heard and read, but responded to. So thank you very much for that interactivity. Keep it up. And when it comes to today's issue, we are going to look at ESG investments and sustainable investments in general, but also dig deeper into what financial capitals can really do in order to contribute to this positive momentum we are seeing. Positive momentum, you may say. What does that mean? Let me tell you that the latest report by Fidelity actually showed that in 2020, more than $1 trillion US actually did go into ESG or some sort of sustainable investments. The amount of money that is going in is flabbergasting. Green bonds really hitting an all-time high just months ago, almost $500 million US flooding into green bonds as well. So it's a hot issue, but let's get more into detail with Simon Tribelhorn. He is the CEO of the Liechtenstein Bankers Association. He joins us today here on Mentory TV to discuss the issue and drill deeper into the financial capitals as well. Simon, thank you so much for being with us here on the show.
Hi, good morning, Patricia. It's really a pleasure to participate in the show, and good morning, everybody. Pleasure to be here.
Yeah, absolutely. We are so honored that you come because you do have a very important position in Liechtenstein representing, the banking association. So when you speak for those that have joined you. I think more than 13 banks that are part of that association. Now, I just said in the intro to all of our viewers that the dynamics into ESG sustainable investments has been flabbergasting. Over the last 3 years, I think it doubled the amount of money. So I'm wondering, we are going from mainstream, from boutique to mainstream in this kind of investments. Why this dynamic? What are the key drivers, you would say?
Well, I think the whole process started years ago, but the dynamic increased after 2015. The Paris Agreement was very important, and of course the Sustainable Development Goals, which has been published by the United Nations. And I'm really convinced that these two publications, or let's say the Paris Agreement and the Sustainable Development Goals, really pushed forward the dynamic and increased the dynamic in sustainable investing.
Yeah, that I think is really, really important that we have the policy coming into the picture, really trying to put the economy into a certain direction. But, we had Kyoto in 2005. And then not that much happened since. And then all of a sudden we see this dynamic with the UN regulation, as well as with the Paris Agreement, get a little bit more of a dynamic. However, if you look at investors, and I wonder that whether we are seeing more and more, not only stakeholder activism, but also stakeholder capitalism flooding in, that they say, look, we are not going to invest in any kind of companies or funds that might not have some sort of angle when it comes to sustainability and ESG.
What we have seen over the last few years is that the awareness has increased that in sustainable investing is not just a trend, it is the future, it will become mainstream, and therefore for investors, it became very important to invest more meaningfully. Mm-hmm. Yeah. Well, and that's one part. The other part is the performance in the longer run is even better if you invest in in sustainable investments.
Yeah.
And therefore, that's another main reason why investors became aware that sustainable investments are not just a trend, but the future.
Yeah. And, Simon, I dived deep into the research there, and it's so true what you're saying that, for example, in 2020, in the first half, ESG-driven investments have outperformed stocks that were not looking at sustainability. And one of the studies said that it's actually also the millennials that demand just more than just profits. They want to have this, all the stakeholders being considered in the entire supply chain of whatever the company is producing. And, this is so we have governments pushing for regulation. Then we have the actual investors pushing for, hey, we want to invest in a certain way. But the institutional investors as well, and let me just share this with you and get your comment. I saw a very interesting interview with Larry Fink, the CEO of BlackRock. And as you know, it's the biggest asset manager in the world, holding more than $7.4 trillion worth of assets. And he said, climate risk nowadays is investment risk. And all what we are doing with our assets now, really finding companies that have an ESG angle and invest all of our assets in these type of companies, all right, unless they do it, it's just the way we are listening to our clients. And it is profitable. What do you say to that?
Well, I absolutely agree. And what we have seen during the pandemic, and I think it's very remarkable that in the light of the current pandemic, this trend, or let's say this awareness, even increased. We have seen during the pandemic that the performance of ESG-aligned investments were better than conventional investments, and I think that shows even more that sustainable investments, in the end, and not only in the long run, but as well in times of crisis, there are more stable. There are more that the performance is better, and there is no reason not to invest in sustainable investments.
Yeah, no, I think this is really interesting because I speak to a lot of people also in the industry, and everybody's talking to me about, this must not be just another recovery from the pandemic or the economic damage caused by the measures taken against the pandemic, but it needs to be a green recovery. Finally, a green recovery, because we have all the elements. We have the institutional investors, we have the actual customers, the investors, the private investors, and we have also the governments on board. So I think it is like a perfect storm to really go into a more sustainable world. Yeah. But the reason why we are here together is that I think there's a fantastic study out, and you're part of this study, talking about the financial centers for sustainability. Now, that seems to be an approach, and give us all the, the definition and the ins and outs of what this report is saying, that the financial capitals have a lever that is very direct in order to push this kind of dynamic forward.
Yeah, you're mentioning the study published by FC4S, the international network, which is called Financial Centers for Sustainability. Yes, it's true. And I think it shows very clearly and emphasizes the great importance of the financial sector for the transition of the whole economy towards more sustainability. And it shows as well that the financial centers and the banks over the last few years have made great progress in their efforts. And I think that's very important, or let's say a very important outcome as well. But what the study tells us as well, that politicians, regulators, financial centers, they all agree that regulation is needed in order to sustain the necessary momentum towards more sustainability. And I think that's an important learning, because the EU is very much pushing forward regulation in this context and in this area.
Yeah, and when it comes to regulation, and I always talk about it in the context of financial centers or financial institutions. There's so many regulations, okay, because trust has been broken over and over again. The 2008, 2009, 2015, yada yada yada. I mean, we have it all, and then you get regulation slapped onto the financial sector to create trust, but the banks, the institutions themselves just say, wait. Not more regulation, there's over-regulation. How tough is the balance?
Well, that's what we normally hear from the private sector, that we don't need any more regulation. But I think that's different, because everybody has realized that action is really, urgent action is really needed. And therefore, there is no pushback from the private sector anymore. On the other hand, or let's say, instead of that, the private sector is asking, and the banks are asking for clarity, for predictability, and therefore, regulation is in my view, very important. The private sector is asking for this regulation, but it has to be. And I think that taxonomy is really the cornerstone. This taxonomy has to be uniform. The EU is pushing forward, so it has to be an international. In the end, it has to be a uniform international taxonomy, and this is really crucial, I think.
Yeah, and let's drill deeper into taxonomy. First of all, let's define what taxonomy actually means.
Well, the taxonomy is kind of a classification system which has been published, so it's already available. It's huge. Well, the paperwork is huge, but it gives kind of an orientation for banks, for asset managers, and that's one part. But what we have seen as well, and what comes out of this study as well, is that the taxonomy must be pragmatic and in the end implementable for banks, for asset managers, and for all which need to apply the taxonomy in the end.
Yeah. If I look at all of these funds, I'm an investor myself, and I think, okay, we do have certain levels of ESG compliant companies. Yeah. One potentially invests in. One of the results I was very intrigued about in this report, the FC4S report, was that the thirst for data, one of the key points. So, where does the data come from that I really do know that my investment is ESG compliant and sustainable? How reliable is it? How often is it updated? There seems to be still a dichotomy between greenwashing potentially, because you simply don't know all the way through your stakeholders or your supply chain how green and ESG compliant that company at the end, that investment at the end is.
Yeah, fully agree. I think that's a huge challenge. We need to have more data, a better quality of data, and I think there comes the so-called SFDR, the disclosure regulation comes in, which is another very important piece in this regulatory framework coming from the EU.
And you know what? Sorry, go ahead.
Well, and the disclosure regulation will be applicable, or let's say the first set will be applicable already by the end of March this year. So this is another very important cornerstone, the SFDR, which very much interplays with the taxonomy.
Yes, and I think this is a crucial point you're mentioning. And Larry Fink actually also mentioned it. He says that, the regulation, the kind of, the accounting standards need to include a lot more than just the financials. So I'm paraphrasing him right now. And I think unless you do have, the auditors looking at numbers that go beyond the bottom line and the top line, but includes also more than climate change, but the social aspect, the governance in general, we can really make a more informed decision.
Yeah, fully agree. I mean, climate change is, let's say, one of the challenges which is really urgent. Urgent action is really needed. But in the end, the taxonomy has not just to be a uniform taxonomy and internationally accepted. So the taxonomy, which has been published by the EU, could be internationally the standard for all. So that's very important. But it could be as well, let's say, the blueprint for integrating the social aspects and governance aspects. So in the end, and that's my conviction, and as well the conviction of the whole association, that sustainable behavior should not only focus on combating climate change, but as well including the other aspects of the SDGs. And the SDGs, in my view, is kind of a framework to integrate all these aspects and, let's say, implementing in the end, or in other words, being compliant with the UN Sustainable Development Goals, and all countries, or more or less all countries now, have agreed to these standards, the SDGs.
Yeah, absolutely. Under the Paris Agreement, there is, I think, only 2 countries that are not part of it. And I think that is a crucial point, that whatever you do in terms of regulation in this kind of sense needs to be a level playing field. So it cannot be that the EU plays differently than the US, because then you become a very different competitive advantage in terms of investment opportunity or even performance. But let's now leave the overall picture and really get more and more into what financial centers can really do. So one thing is the results. Data is an issue, transparency in general is an issue, regulation is an issue. Later on, we're also going to talk about the education and the actual professional approach on how to do ESG investments if you're an asset manager. Okay, that would surprise me. There's quite a bit of a lack, it seems. But why financial centers? Why are they all of a sudden, so engaged? Isn't it not enough to have the UN regulation, the Paris Agreement?
Well, I think because financial centers or financial intermediaries are a kind of a bridge between the investors and those who are seeking investments. And that's why I'm really very much convinced that the intermediaries have a very important role, or play a crucial role when it comes to the whole transition towards more sustainability. And if we all agree that it's not just a trend, but it is the future, sustainable investments are the future, then obviously it's out of question. And if you agree as well that financial intermediaries play a very important bridge role, then I think not to engage as an intermediary is a decision in the long run. Do I want to be relevant or not? So for me, it's a question, in the end, am I forward-looking? Do I want to be relevant in the whole competition in the financial market, or want to risk in the end to be excluded out of the market? So for me, it's a question of competition, of staying relevant or remaining relevant in the future as a competitor in the financial markets.
And you just mentioned the bridge role. What do you mean, the bridge role of the financial centers? Wow. How does it actually look?
Well, because when it comes to the asset allocation, the intermediaries, asset managers play a key role. Let's take an asset manager advising his client. he plays, in my view, a crucial role to help the client to find the right investments, to advise him in the right direction, which is in the longer run, or in medium term, longer run, for him, the best solution.
Yeah, and I agree. But you know what, Simon, and please disagree with me if I'm talking nonsense. For me, it actually should start even earlier, because if I'm an entrepreneur and I want to have a loan from a bank, I want to get my idea financed. And if this idea is not sound from an ESG sustainable perspective, it's up to the bank to decide, will I support it with a loan or not? Never mind making money on it or not. Doesn't it already start there potentially?
Yeah, absolutely. When it comes to where do I want to invest my money, I mean, we as a country in Liechtenstein, we decided, like in Switzerland, to participate the so-called internationally coordinated PACTA assessment, and PACTA stands for Paris Agreement Capital Transition Assessment, and we have gone through as a country with it was the deliberate decision of the country and of the intermediaries as well to go through this process. Switzerland did it with a few intermediaries, and Liechtenstein. I mean, it was a little bit disappointing. Only 14 intermediaries, but the bigger banks, they decided to participate. And what the reason was, or let's say the goal was, to participate in this coordinated assessment was to find out how much aligned are the investments clients of the clients and of the banks with the 1.5 degree goal of the Paris Agreement.
Yeah, and it's so interesting because they are really measured against it. And actually talking about you saying it's a bit disappointing how many banks did or did not participate. Actually, when it comes to the asset managers, I found another study I want to share with you, Simon, and it is the Net Zero Asset Managers Initiative. And these are the 30 biggest asset managers, including UBS asset management, for example, and also Legal General, that said we are going to have net zero emission portfolios by 2050. I mean, these guys shift serious money. That's encouraging, though, isn't it?
Well, that's for sure. It's challenging, but it's forward-looking, and I think that is a role model, and that has to be copied by other intermediaries as well. So I very much like that approach, and I fully support such an approach.
You know, Simon, I was just thinking, I just had in the last couple of weeks interviews with the CEO of Ecopetrol and also the CEO of Baker Hughes. Now, both of these companies are very much in the oil and gas business. So you could argue this is the old economy kind of representatives when it comes to the companies and the business. And I wonder, you know, if you have the asset managers, if you've got the customers of asset managers and the regulation all pushing towards ESG, what's going to happen to the old economy stocks? I mean, we still need energy. There will still be oil around. There will be gas around. There will be shale gas around. I mean, what's going to happen to these stocks if all of a sudden we're seeing trillions and trillions of dollars being pushed towards ESG compliant stocks? And that wraps up the first part of my conversation with Simon Tribelhorn, the CEO of Liechtenstein Bankers Association. We continue talking in the second part about sustainable investments and what financial capital centers really can contribute in order to accelerate a very dynamic trend. And if you do like my conversations here on Mentory TV, why don't you subscribe for free? Hit the bell button so I can keep you informed about the latest videos. Plus, share it, like it. It all really is a lot of support. Plus, as well, thank you so much for all your comments. You're incredibly interactive, also sending me so many fantastic ideas. Co-creation is what Mentory TV is all about. See you at the second part.